What's up, YouTube family? It's Keon of Key Investments here, and today we're going to go over a few stock terms for the beginner investor. So let's go ahead and get started. I'm going to go over 5 different terms for you guys. So the first vocabulary word of the series is ticker symbols. You as an investor will use a company's ticker symbol to search for the stock. It's like a company's stock name. So as you can see, Apple's ticker symbol would be AAPL. CVS would be still CVS. Disney is DIS. They're typically letters, and they are just what investors use to place trade orders. So when you go into any online brokerage, like such as Robinhood, for example, you're not going to search the companies by their actual name. You're going to search them by their ticker symbol. The next vocabulary word that every investor should know is actually 2 words. It is an online broker. And an online broker is the middleman between a buyer and a seller of a stock. So they actually either make trades on the seller's behalf or the buyer's behalf, and sometimes for a fee or a commission. But here lately, there are more online brokerages offering free trading, no commission fee. So you as an individual investor will be either buying or selling securities at any given time. So the broker is the one that actually makes that purchase happen. You will submit your request to purchase a stock at a certain price, and it's up to the broker to execute that sell or buy at that price for you. Each investor should be familiar with the term volatility. It is a term you will hear very often when describing the stock market or a particular stock or security. Volatility is when there are big swings in either direction. If there's big swing up or big swing down, as you see the graph before you, you'll see that whatever security this is that's shown in this graph is not particularly steady or gradual. You can see that there are many different swings, either up or down, but it's not steady at all. So we would call whatever security this is in this example very volatile, or it has high volatility. Currently in the markets, you may hear someone call the state of the stock market now volatile. And that means it's just, like I said, either swinging like really high, really low, really fast, usually in a short period of time. And stock market as a whole is very volatile right now due to a different series of unfortunate events, I should say. So you may hear that word a lot when speaking with other investors, and it's very common that either a stock or just the market in general can be very volatile. We often describe stocks as volatile when they are less predictable. As you can see in the example, whichever security this is not very steady or predictable. It kind of takes big swings in one direction or the other. That would be a high volatility security or stock. Volatility can either be a good thing or a bad thing. It just kind of depends on what type of investor you are. If you are a long-term investor, you are not going to want stocks that are very volatile. You want kind of a steady stock, a blue chip stock that's just kind of been in the game for years, and their prices don't necessarily fluctuate a lot. Now we're going to discuss what points are as it pertains to stocks. For stocks, 1 point equals $1. A point usually describes a share price gain or loss within a time period. So you may hear like, oh, the NASDAQ was down 2,000 points today. So if you guys follow along with me here, starting with the first picture on the left, you will see that this stock is trading for $23,839. And as of March 9th, as you can see below, that stock is down $2,025 or 2,025 points. But just know that each point equals $1. So that stock in particular is down, like I said, 2,025 points or dollars, which is also down 7.83%. As you can see in parentheses to the right, that is another way to describe your securities, by percentage or by points. To the right, same deal. This stock was trading for $23,840, and you can see that it was down 2,024 points. You can tell if it's down or up by the plus or minus sign next to the points. So as you can see, there is a negative sign next to the $2,024. So in that case, that stock is down. But if that stock happened to be up, you would see a plus sign and then however many points that stock is up for that time period. Our final vocabulary word of the day is dividends. Dividends are payments to investors from the company's board of directors. So the company actually gives each of its investors a portion of its profits as an incentive for the investors to continue investing in their companies. Typically, dividends are paid out quarterly, which is 4 times a year, but you do also have other dividend offering companies that pay out monthly or sometimes maybe twice a year or only once a year. It is important to note that not all stocks offer dividends. So be sure to do your homework and your research to decide what stocks are of value to you in your investments. But do not assume that all stocks offer dividends, because not all stocks do. Thank you guys for tuning in. I hope that you have found some value in this video and have learned a few different terms to add to your vocabulary as a new investor. I will be continuing this series with a few more vocab words in the future, so make sure that you turn on that notification bell and make sure that you hit subscribe and like this video. It really helps out a lot when you guys like the video, and we'll be seeing you guys soon.